So hi guys and girls, hope you are magic. Now you probably note straight away I've got a puffy jacket on. I don't know about you guys. I'd love to, again, as we normally do. I'm gonna put this little camera down here. I've got to share my screen. So let me just get this up and racing. Guys, that being said, it is really, really cold. Really, really cold. So let me move this little camera around. Because just letting you know, well, it's not a puffy, it's a furry on, guys. They're called furry jackets over here. Guys, it's 10 degrees. So and I'm not gonna, I don't want to spark any conspiracy theory arguments at this point in time. It's very early in the webinar for that. But we are literally 22 days away from summer and it's 10. So it's cold. It's cold. So I hope you don't mind, guys. I'm going to be presenting tonight in a jacket because it is cold. I'm just going to, guys, let me just jump on your chat. I want to make sure that everybody can chat to each other. I'm just going to try and change that setting, guys, in the background so everybody can chat and say questions and similar things. Guys, I'd love to find out, guys, if I can, where is everybody from? Now, I'm in Japan. It's the reason it's so cold because I'm in Japan today and it is cold. It is cold. So I'd love to find out. It's not only have we got good sound, it looks like we've got good sound. I'm also wanting to make sure the webinar chat. Oh, I've got Q&As coming through. The chat is disabled. I'm going to try and undisable the chat. I'm just trying to do that at the moment. In fact, we'll go the other way. No, it done. It's all good. So could I ask, guys, our amazing trading pit host, could you possibly undisable the chat for us so that the chat can bop along? Because at the moment I've got
On it. Give me a sec,
you
guys.
let's talk about hostess with the mostest. I appreciate that. Thank you. So guys, we want to be able to chat. I want to find out where everybody's hiding, guys. In fact, speaking of YouTube, guys, the first of our webinars that was a couple of weeks ago. Oh, there we go. Okay, we're on now. That is absolutely amazing. So the first of our webinars, guys, is literally cruising towards 200 views. Okay, so that is slowly but surely gathering momentum. Oh, here we go. Wow. Okay, so we've got. All right, so let's run through it as quickly as we can. We've got Gold Coast, Melbourne, we've got Bali, me, Japan. I know we've got the Malaysians that are logging in this afternoon, guys. We've got the Europeans logging in. So what have we got? Melbourne, Perth. It's here I am. It's bloody streaming. So that's brilliant. Falcon Beach. Okay, absolutely beautiful. Falcon Beach in WA. Sydney, Melbourne, Tassie. Brisbane. All right, so we're very Australian centric today with a couple of spatterings of overseas, which is fantastic. So guys, welcome to part 2 of the webinar. Balmy 19 degrees in Brisbane. It's a very cold 10 degrees here. Keith, Northern WA, that's right out the middle of nowhere. So guys, we've got a truly diverse webinar tonight. As we are going to, this is part 3 of our webinar series with the Trading Pit. And again, I've said thank you to I call them TTP. So thank you to TTP again for having us. Guys, the beauty of tonight is we're doing 3 basic webinars. Guys, this is obviously the 3rd of those. Then guys, next week, we're going to step into 3 intermediate webinars. And then the following 3 weeks, we're going to step into 3 advanced webinars. And I think, guys, at the end of the day, kind of doesn't matter where you are in the world in terms of location, but also in trading talent or trading skill set. These webinars are not only going to help you get traction on sort of the basic considerations of how to be a really, really good trader, but what you're going to see over and over and over again, guys, is the same message, certainly from me, that simplicity wins every day. And what we'll do, guys, to highlight that simplicity is we'll talk about what we did in the live trading room tonight. As many of you are already aware, we run a European Open live trading room that specifically targets 3 markets on the European Open. As we're moving very, very quickly towards having a US Open live trading room and also a US closed live trading room. And that US live trading room is also going to be trading in the pre-market as well. So we're going to get to the point, guys, where we basically become the one-stop shop, guys, the one-stop shop for live trading rooms in Asia, which is kind of good fun. Adrian, the Trading Pit webinar number 2, guys, is about to be put on YouTube. So the Trading Pit team have been away for the Orthodox Easter that runs through this time slot over in Europe, and it's going to be coming. Very, very soon. All right, so guys and girls, we're going to get started. Part 3 of the webinar, we're going to be talking about part 3 of the webinar series, I should say. We're going to be talking about the rule of 3. Now, the whole intent behind the rule of 3 is the markets typically, guys, regardless of the size of the charts that you're trading, it could be a daily chart, could be a weekly chart, could be a 5-minute chart, could be 15 or 60. As a lot of the currency traders globally trade a 4-hour chart. It doesn't matter what you're trading, but the market will typically move in 3 phases. Right. So what we're going to be doing tonight is we're going to be talking about a phenomenon in the world of trading that's been around for a long time called 3 steps and a stumble. So literally the market normally moves in 3 pushes and then it has a stumble. So we're going to be talking about that tonight. Now, the beauty of that, guys, is we can apply that to the 5-minute chart from tonight. Right. So as I do in every webinar, I'll go to a live NASDAQ chart. We'll talk about the trades that we took in the live trading room tonight, but we're also going to be talking about the live charts and how could you have read the live charts based on the theory I'm presenting tonight in order to pick up very, very high probability trades, literally while the webinar is running. Now, guys, the beauty of that, for those of you that have been to webinars before that I run, you'll note that every time I run a webinar, I bring up a live chart. Now, the reason I do that, just so everybody be super clear, is that the reason I do this is that I could literally go back 4 or 5 weeks and find you an absolutely amazing trade that looks incredible. But it's a lot harder as a trading educator and presenter to find a trade on a live chart where there is nowhere to hide. And you can actually go and measure the live chart for yourselves and go, wow, I can see this phenomenon occurring on my charts as well as Lockie's. So guys, that's the goal tonight. I'm going to try and do all of that inside 60 minutes. That'll be an interesting test because everybody knows that I do love teaching. As I've been around teaching for a little while. So what does it ultimately mean? I'm going to try and get it done as quickly as I can because the value, guys, the value, dare I say it, in tonight, the value is in the theory and the value is in also seeing that theory unfold live in the chart. So that's the goal for tonight. So in terms of the rule of 3, guys, what we want to do is we want to focus on what does it actually mean? And ultimately then, how do we use the rule of 3 in context with both candlestick analysis, which we did in webinar number 1, and also stair stepping in the market, which we did in webinar number 2. Now, ultimately, guys, if we combine all of those together, i.e., what does it mean? What's the rule of 3? And we combine candlestick analysis and stair step, we end up with 4 keys to very, very high probability trading. And the beauty of the webinar tonight, I can say, don't trust me. don't take my word for it. We're going to be looking at the NASDAQ chart live, and you'll be able to see this phenomenon working in the charts. And the rule of 3 ultimately, guys, enables you to take a guess and a very, very educated and deliberate guess as to where the market is likely to go next. Now, obviously, if we're reversing the market, we can go for really long range targets. If we're not reversing the market, we go for slightly shorter range targets. However, I wonder, guys and girls, based on the rule of 3 from tonight, from a live NASDAQ chart, could we have actually picked up multiple winning trades? I think that's probably not only a really good question, but I do think that will mean that you can leave the webinar, guys, having got massive value out of the session. So creating value for all of you tonight, not to mention the education side of what we're doing, but creating value, guys, that is my target tonight. There's no question. Now, let's move on because we are going to be speaking tonight, guys, in multiple jurisdictions. So it looks like last time we were 5 countries, time before we were 6 countries. I do think we're going to be going across multiple jurisdictions. Guys, I've got to do 4 compliance slides. So firstly, for those trading futures or CFDs, we must understand they involve risk. Right? So there's a risk of making money and losing money every time you take a trade. Now, the flip side of that discussion, guys, we are trading on margin using either a CFD or a futures contract. What does that mean? Guys, that can actually make our wins really big, really quickly. It can also make our losses really big, really quickly. So you'll ultimately find tonight that I will keep talking about effectively we are professional risk controllers. Right? So one of the reasons why we look at this beautiful 3-phase move in the market and we anticipate the market direction based on that is because at the end of the day, we are professional risk controllers, guys. That's what we do. Now, I do have to mention, guys, the presentation is general information only. Also, the past performance of any financial product in the world, guys, is no longer allowed to be used as a reference for future performance. We used to be able to, guys, until about 10 years ago. Then the fund police came in and said, you can't do that anymore. And guys, here we are, as compliant as we possibly can be. So a quick intro, as for those of you that don't know me, or you have not worked with me yet, or you're watching this on YouTube thinking, who's this crazy guy wearing a puffy jacket in the middle of Japanese summer, almost Japanese summer? May I suggest, if I can, as I'm the CTO or Chief Trading Officer at Doro. Effectively, I have significant experience in I call it the game of trading, guys and girls, because I do believe fundamentally it is a game. And if you want to win the game, guys, if you want to win the game, you've got to stay disciplined and patient long enough to make money. Okay, so that reeks of consistency. It reeks of simplicity. Like many of you I've worked with already, guys. Some of you I'm already working, guys, in the live trading room at Doro. Some of you are trading to be professional prop traders also at Doro. Guys, it's always about simplicity. Okay, now I do come from a military background, so you will find tonight that everything I do is very, very deliberate. Guys, it's very deliberate, it's very, very mathematical, and probably one of the biggest, guys, one of the biggest messages you'll get out of my session tonight, guys, regardless of what you trade, Forex versus futures versus CFDs, 5-minute chart, 15, 60-minute chart, it makes no difference. What you will find is the simplicity of my charts. There's no confusion about silly little indicators, guys, and also really important, we just don't make stuff up for the purpose of running a webinar. I've got a lot of webinars around the world. I see a lot of YouTube videos, and I'm amazed at the number of people that just make something up on the day to look good. I've been presenting basically the same chart since 2007. So I'm very boring. I'm very, very boring. Because if it means anything for those watching the session tonight, in the live trading room today, we spoke about 4 trades in total, because it was in fact, that's not correct, 5 trades. 1 trade on the S&P, which went to target. We spoke about 2 trades on the NASDAQ that went to target, and we spoke to 2 trades on the FDAX that also went to target. So tonight in the live trading room, it was very, very congested trading, where we had 5 trades, 5 wins. So again, last time we ran the webinar, I believe it was 7 and 7. So how do we achieve this consistency on a weekly basis and a daily basis? Well, we keep our trading very, very simple. Okay, so a little bit of history, guys, a little bit of history about me. When did it all start? On the 1st of August 2007, I discovered futures trading. At that point in time, I was a Forex trader and a CFD trader. As soon as I understood the design of the futures markets and the fact that we didn't have to trade against an OTC broker, I immediately became a futures trader and shut down my Forex account, my CFD account. Probably the best change I was ever made in the game of trading. Guys, the 1st of August 2009. Okay, so literally 2 years of learning what other people were doing. I launched my first trading school in Australia. Guys, I wrote all my own strategies and all my own indicators. The reason I did that is I found there were lots of trading educators around the world, guys, that were talking about these amazing concepts, but at the end of the day, most of them didn't actually trade. So I actually had to go and make my own course, which I did, guys, and it's basically blossomed from February 2010. Mid-2010, we launched the efficiency and delta indicators. We're still using exactly those indicators, or a variety of those now. They are pure price movement-based indicators. So for those of you that do kind of understand what are the best indicators in the world, the indicators that are based on the pure price movement of the market. In 2011, as I started speaking internationally, guys, on all things futures trading, I've actually had the opportunity, guys, to speak, I think, in 11 countries, and I've got now clients in 22 countries, and more than 2,500 people, guys, have got access to that base education course I wrote from 2009. Now, for those of you that are wanting a very, very in-depth education, guys, the new 101 course by Doro is actually being released on the 1st of July, and that will probably, may I suggest, probably revolutionize what we're doing, guys, in the education space. I personally, John, so you talk about CFDs, I personally use the futures markets only, and I use the futures markets only because of the design of the markets themselves. Now, in saying that, there is quite a few people out there in the world, mate, that want to use our strategies on the 4-hour chart and the daily chart using a CFD. Now, they can do that, and it's very, very profitable. Mind you, flip side, I like running a live trading room every day where our average trades around about 7 minutes. We get in, we get out, we get the job done, and then we literally disappear. Okay, that's what I prefer as my style of trading. As in 2013, I got to work with what then not the president of the US, clearly became the president of the US, Mr. Trump. We were literally talking as we came into the webinar tonight, guys, about the US election coming up. I do think the US election is going to be a very, very interesting thing to watch. Guys, a lot of people are actually suggesting we won't even make it to the election. Flip side being the volatility, guys, regardless of what political fence you sit on, the volatility this year, guys, into 2024 and 2025, volatility is going to be amazing. So now would have to be a really, really exciting time, guys, to be understanding how to trade properly. Guys, at the end of 2023, to literally enhance my career further, I moved to Japan. As my journey, I should say, with Doro day trading started, and as I've got to say, thanks to the Doro team, it has been phenomenal. But mind you, guys, I'm doing something I really love doing, and it's working really well. So it'd be great to take you into that world tonight, and guys, talk about this this magic rule of three. So to put the rule of three, guys, into context, what we'll do is we'll very, very quickly talk about the European Open from tonight. So we'll look at the live charts. We are going to use the NASDAQ because this is a beginner webinar series, and the NASDAQ's very, very good for beginner traders. Gee, you're absolutely on the money, guys. People are dropping MAGA comments into the chat. May I go out on a limb here, guys? Go out on a limb. I think it's about time we actually make America great again. But can I say to the Aussies out there, I think we've also got to do a lot of work in Australia. Guys, make Australia great again. How about make Cyprus great again? Make all these countries great again. So mind you, that's going to cost a lot of money, guys, and the markets turn over billions, trillions of dollars on a daily basis. So may I suggest we could make our own little contributions, guys, as being great traders. But that's what I think we need to do. Now we are going to focus tonight, guys, on a very, very simple signal set. So effectively, I'll talk about two styles of trading, slightly more advanced and very, very simple. So even for those people that have never traded my strategies or indicators before, you'll see exactly why we entered trades. Now, if you can walk away from the webinar tonight knowing exactly why we did what we did, then not only have you learned something, but you're going to start to trust what we do very, very quickly. And hence the target learning all the way down the bottom there. Guys, why did we actually take these trades? If you can see why we took the trades, guys, you're going to be in a great place to actually go and analyze the financial charts yourself and work out, I know exactly what these guys are doing, and this looks really, really exciting. In the previous webinar, you said the markets will be down. Yeah, they are down. Right? Well, in fact, they were very, very down last night. We actually triggered daily shorts. Mokini, how are you from South Africa? Guys, do you know what that means? You know how I said my goal in each of these webinars was to hit 7 countries? Well, guess what? Mokini from South Africa, we've just hit 7 countries in the webinar, so thank you. You've just made my day. That's exciting. All right, now guys, let's have a look. Feeling good? Fantastic. Well done. So guys, the rule of 3 was originally drafted in 2007. Now, again, if we build on what we did in webinar number 2, guys, and also webinar number 1, it was built on the foundation of if stair stepping is king, I should say, then price is queen. Now, in saying that though, guys, last week we were talking about, the stair step in the market and how easy that is to read. But my question for everybody tonight is, I wonder how far that stair step is normally going to go. Now, this may blow your mind when we see the charts, when we answer that question. I wonder how far. I mean, it's one thing to identify the stair step, but the second thing will be to say, I wonder how far they're actually going to go. Because if they've gone as far as they're going to go in one direction, we're going to pick up a great signal in the other direction. So it'd be interesting to go and see on the live charts. So guys, what we want to do, remembering last week, step in the market is marked from extreme high to extreme low. All right, now we covered that in the session last week. Once your step is marked, we can then start to count the number of steps in the market. Okay, now we do this actually to work out 2 things. Now, effectively, if we know the market is going to move in a certain direction because we're very, very early in the stair step count, we can basically join the team that's creating those stair steps with the intent of getting paid. The flip side is if we know the market normally moves in 3 phases, guys. Now, remember I said at the start of the webinar, that's 3 steps and a stumble. So if we know the market normally moves in 3 phases, we're actually anticipating that the market's going to fail at that point. So if the buyers are stair stepping the market up, we're going to get ready to sell. And if the sellers are stair stepping the market down, which is exactly what's occurred for the majority of the session today, as if the sellers have actually sold the market down, we're actually getting ready to buy it and send it back the other way for a very, very low risk, high potential reward trade. Okay, and when I show you the live charts from the Nasdaq from tonight, guys, this 3 steps and a stumble concept may actually get very, very exciting for many of you. The reason I think it gets very, very exciting, guys, is firstly, 3 steps and a stumble rule has been around since early 2007. Also, if you follow that mentality, guys, my little weightlifting man down in the bottom right-hand corner there, effectively you're saying to the market, I want you to do all of the heavy lifting. Okay, so for those of you that have done some advanced stuff with me, guys, previously, you note that we always say, let the market do the heavy lifting. Okay, so for those people that haven't worked with me before, what that ultimately means is we're saying to the market, you create the signal and I will trade it. We're not going to second guess what the market's going to do. We're not going to try and front run the market. We're not going to rear run the market. We're not going to swing trade the market. What we're going to do is we're just going to wait for the market to create the signal, and then we're going to take advantage of it as per your understanding of the market from webinar 1, 2, and culminating with webinar 3 tonight for the beginner traders. Okay, now let's build on this, guys. The rule of 3. Now, for those of you, rule of 3, I want to do a little bit of revision, guys, a little bit of revision, bit of a checklist, guys, from literally from the last webinar. Now, that being said, for those that missed the webinar, we're going to be talking about something called an ABC stair step in the market. Now, as I move my little camera around a little bit, as we want to learn to identify who's in command of the market and use this as a powerful hint as to the direction the market is likely to go, and therefore the direction we should be trading. Now, this little pattern, guys, is going to be called an ABC pattern. Now, we spoke about this, guys, over the last couple of weeks. What we're going to do is we're going to extend on this education today. Now, we can basically pick up ABC patterns in both directions. Now, for those of you that missed the first couple of webinars, the green are the buyers, the red are the sellers. All right, so you've got a beautiful ABC pattern on the left. You also got a little ABC pattern on the right. Now, the left-hand pattern there, okay, let me just build a little bit of detail on here. The left-hand pattern there, we call that a buyer-owned pattern. Okay, and the left-hand pattern's a buyer-owned pattern because you can see the green legs are bigger than the red ones. As in over there on the right-hand side, we've got a seller-owned pattern, otherwise known as a seller-owned ABC pattern. As we've got that there because we want to actually work out where the sellers or where the buyers are ultimately failing in the market. Now, I'm going to build this slide out. As I build this slide out a little bit, I want to put a comment down the bottom because this is effectively a little bit of revision. Guys, on the left, the buyers own the stair step. On the right, the sellers own the stair step. Now, you can either trade with the stair step, called an efficiency trade that we can talk about throughout the webinar. Or guys, you can also trade against the stair step, called a reversal trade. So for those that missed session 1 and 2, guys, on the left-hand side, that is called an ABC step or literally an ABC pattern owned by the buyers. On the right-hand side, you've got an ABC pattern owned by the sellers. Now, I want to build, guys, I want to build on this concept a little bit further. So what I want to do is I want to talk about the ABC pattern being the foundation of our step counting. So we've got our A and our B and our C. Okay, so everybody knows about that. The buyers pushed the market up. Sellers tried to push the market down, didn't work. The buyers took over, and that's really, really good fun. This point here, guys, this point here, otherwise known as the breach point of the pattern, is where the buyers have basically breached. They've held the line, so they're strong enough to actually close the pattern. Now, this can be visible on a 5-minute chart, a 15-minute chart, and a 60-minute chart. Effectively, what it's mean is they've been able to hold the pattern up, and as a result of that, the buyers are now in command of the market. What does that mean? Well, that means if you pick any buy signals up in that little C leg there, that's called our second phase of movement. Okay, you're going to pick up some very, very high probability signals in that move. Okay, let me keep on building on this concept a little bit further. Now, again, that little point down there, guys and girls, is going to become really, really important in the live charts. We call that the buyer B point. What does it ultimately tell us? As I put in the brackets there, that proves to us that the sellers are failing in the market. Why do we want to know that? Well, where the sellers fail is a really good spot for you to put your stop loss or your risk control, particularly if you're running the market up over multiple steps. Okay, I'll just plant that seed about risk control as I'll keep on building. So once the buyers close over the breach point, we say the buyers own the step. We also say that the buyers have completed 2 buying steps, or you could say 2 buying campaigns, 2 phases, if you want, guys, 2 buying phases. Absolutely brilliant. It builds beautifully into what we're going to be doing tonight. So I'm going to jump on that, guys, over there in the green. I'm going to call that buyers step number 1. We're going to call that buyers step number 2 to make this really, really clear. Now, the beauty of that, guys, if you pick a great buy signal in the second buyer leg, this will be a very high probability trade. Why is that? All professional futures traders think the same. What does that mean? Everybody's anticipating a third move in the market. Why? Because the futures markets in particular almost always move in 3 phases. So you can imagine, guys and girls, today on the NASDAQ, if there's thousands of people around the world watching and trading the NASDAQ, so thousands of people see the same price at the same time, and everybody thinks the market's going to move in 3 steps, what is it likely to do? It's likely to move in 3 steps. Now, the beauty of that is once the 3 steps have finished, the market is likely to reverse because everybody that was creating the stair steps up decide, you know what, we can't go up any further. We're probably going to sell the market down, and we pick up a really, really great reversal signal. I just want to plant that seed as well. So let me build on this. Guys, so what we're going to do is we're going to turn our ABC pattern into an ABCDE. Okay, you're probably going, well, Lockie, this is pretty straightforward. Guys, in principle, it's very straightforward because we've effectively got 3 buying legs or 3 stair steps to the high side there. Okay, now, interesting point, guys. Please note leg 2. So I just want to, this is for the mathematicians out there in the world. Guys, the buying step 2 or buying leg 2 is normally twice the size of leg number 1. So you get a little leg number 1, and then you get a retracement, then you get a big burst of volatility and volume in the market. So that one goes a long way. And then you get this tiny little leg at the end. Now, it doesn't necessarily always work that A is half the size of C and C is, that doesn't always work. And therefore, guys, we don't want to rely on the size. We don't want to rely on the size. We just want to rely on the actual stair stepping from extreme high to extreme low. John, that's a great question, guys. John said, guys, in real time, it may be a little bit more difficult to see. In real time, and if you mark your stair step from extreme high to extreme low to extreme high, it becomes really easy to see quite quickly, right? As I'll show you on the live charts. So ultimately, guys and girls, interesting point. The more you focus in on one teaching and the more you simplify your trading down to one ideal in trading, the better you get at that single ideal. Okay, as I was saying in a webinar earlier in the week, as if you're going to get really, really good at trading, I would follow one strategy in one live trading room with one set of coaches. I wouldn't be getting coaching from 50 different locations. Otherwise, you're ultimately going to get 50 different opinions, and that's going to end up in confusion. And confusion is not what we need in the game of trading at all. John, I'll keep building this, and then I'll show you the live chart. It'll become really, really obvious really, really quickly. So guys, what happens after we get 3 steps if everyone ultimately thinks the same thing? Well, you've got the buyers pushing the market up here. Everybody's backing the buyers because the sellers are losing. But the moment the buyers basically fatigue themselves, and a little magic number, guys and girls, if you're writing things down, please write this down. The NASDAQ loves to fatigue at the 133 fib extension. Okay, it's called the 133% extension. That's where the NASDAQ typically fails in the European Open. So I wonder if today, guys, on live charts, I wonder if today we had a beautiful 3-phase move in the market, and then it happened to fail at the 133 fib extension and then turn around and go back the other way, almost perfectly in akin with these slides, even though it's a live chart. Now, I wonder if that occurred. For those of you that have been to my webinars before, you're probably going, yeah, Lockie, you're probably going to show us that it's done exactly that. So guys, I can tell you the magic number on the NASDAQ is the 133. Okay, I just want to plant that seed. So what normally occurs, guys, what normally occurs is we end up with a phenomenon called 3 steps in the stumble. So what does it look like? So you clearly got those 3 steps there. They're going really, really well. You end up with a failed step at the top. So you end up with a tiny little green step at the top. That's basically the stumble. And everyone around the world goes, uh-oh, the buyers have run out of steam. The moment the buyers run out of steam, nobody's buying, everybody's doing what? They're getting ready to sell. Why are they getting ready to sell? Because there's only two teams in the futures trading game, buyers versus the sellers, and the stronger team has to win. If the buyers have run out of steam, guys, it's only because there's too many sellers in the market. So what occurs, guys, we end up with this beautiful stumble pattern right at the top of the chart. What then occurs, guys, is the sellers who want to get even with the buyers, because it's only a two-team game, goes like two little groups of kids playing tug of war. Eventually one falls over and the other one wins. Once the buyers start to stumble, the sellers notice. Guys, how do you also notice this? So if the buyers are failing to basically create brand new higher highs, if they've got this tiny little stumble leg, which I've called it inside that little black rectangle, as you're getting ready for the sellers to get even with the buyers. Now, the two things the buyers are going to target, sellers, the two things the sellers are going to target are both of those black lines. That's the reason the sellers are going to do that, is that's where they failed last time. Okay, so what's going to occur? The sellers will basically come in and smash the buyers. Now, ironically, it was exactly the opposite in the markets tonight, guys. The sellers kept on running down and the buyers just kept on hitting them hard. Then the sellers had another crack at them and off we went. So note, the sellers are likely to target these buyer-owned stair-step points in the market simply because they want to get even with the buyers. That's exactly right. Jeff, that's such a great way of putting it. Or the sellers are hunting the buyers' stop losses. Of course they are, because they're trying to get even with them, which I think is really exciting. Because if everyone, guys, if let's say the vast majority of futures traders globally are well trained, they're going to be looking for exactly the same thing. They're all going to be piling into the market at exactly the same time. And because there isn't a broker on the other side of the market trying to manipulate the market against us, we basically have a clean playing field where the strongest team has to win, which is just the reality of what we do. Now, guys, in saying that, it clearly occurs in both directions. So what we're going to do is we're going to build the ABC pattern again for the sellers, just so we've got the fact that we trade in both directions. What we're then going to do is we're going to mark the really important points like the breach point. Okay, we're also going to grab the seller B point, because that's ultimately where the buyers have failed. And we're going to add to this, guys, a little bit more context. Now, interesting point, if I go to my notes down the bottom. Once the sellers close over the breach point, we say the sellers own the stair step. Okay, we also say that the sellers have completed two selling legs. Guys, what we also say is the sellers are in complete control of the market. Yeah, Adrian, it can be. It can be. There's a lot of people that would apply, this kind of three-phase theory. If they want to do that to like a weekly chart or a monthly chart, they could use Elliott wave, for example. But Elliott wave goes, because our primary trading chart is a 5-minute chart, and we use 15, 60, and 4-hour influence on that. Effectively, the larger Elliott wave style indicators don't work for us. They work well on a weekly and a monthly chart, but on a 5-minute chart, they just simply don't add a ridiculous amount of value to what we do. And if anything, guys and girls, there's a whole lot of indicators out there in the world you can put on your charts, but you will find the most powerful indicators in the world are either pure price movement by itself or indicators designed to show you pure price movement. But it's a very, very good point. Very good point. So guys, with our little stair step here, we're going to add D and E. So our legs D and E. We're also going to label these to make it really, really obvious. You've got seller step 1, step 2, step 3. Guys, once again, okay, if we get down to this little stumble phase, down the bottom, right, I'll build this up for you here. If we get down to this little stumble phase here, all of the professional traders around the world are likely to see the stumble. So ultimately, what does the stumble mean? The sellers are no longer impressing anyone. The only reason they're not impressing anybody is because the buyers are too strong. So once again, just like we did on the previous slide, the buyers are going to be targeting these two step points, right? So one of you said before they're going to be stop loss hunting. That was young Jeff. 100% correct. But the really important point is, because all futures traders see the same thing at the same time, once the sellers start to stumble, the buyers will notice. How do you also notice this? Effectively, the sellers are failing to make and hold lower lows. So what we're doing is we're getting ready to buy. You could also say, guys and girls, if you want to, the sellers are failing to impress me. Now, failing to impress you means instead of creating these beautiful, big, fat candles that are dropping the market down, they start to give you really, really tiny little candles that effectively lack attitude. I'll show you exactly how to spot that. But ultimately, guys, after 3 really, really beautiful steps down, we can expect the market to fail. Now, interesting, if the market fails properly, the buyers are going to do exactly what the sellers did to them last time. So guys, that beauty of that is the buyers are likely to target the seller-owned stair-step points. As Jeff has said before, they're going to hunt the stops. Now, I can't highlight enough, guys and girls, how important it is. This futures trading is a 2-team game. So the only reason the sellers lose is because the buyers have decided the sellers have gone too far and vice versa. John, exactly. John, I wasn't going to say that because Adrian put the comment in about Elliott Wave. It was interesting to him about Elliott Wave, and I've actually got I'm being taught Elliott Wave at the moment, guys, by a trader out of Melbourne. Actually, out of his name is Paul. He's quite incredible. He's teaching me Elliott Wave, guys, just so I can understand what other people are doing. But at the end of the day, I am starting to find that Elliott Wave is incredibly subjective. Now, I agree with what you just said there, mate, because again, guys, if you've got an indicator that's subjective, it's open to interpretation, it means that you might get a great signal, somebody else doesn't, and vice versa. Yet from the start of my education journey, I've designed indicators to give everybody the same signal at the same time. And that's been done very, very deliberately. That's a great question. What is Elliott Wave? We don't have time to do that tonight. That's about a 10-hour webinar and is massively open to subjective comment, let me tell you. So guys, let me build on my slides. Okay. Now, why is this important, guys? Why is this important? I'll just check my time. Our time is running beautifully. Guys, this is important because if you can read the step count in the market, then you can take advantage of it and hunt very, very high probability trades. Now, I do want to highlight a very, very important point. Guys, all great trend trades are taken with the stair step in the market. Okay, so just let me say that again. All great trend trades are taken with the stair step of the market. So stair stepping up or stair stepping down. Ironically, guys, the first trade called by me in the live trading room tonight was an absolutely stunning trend trade. Okay, stunning trend trade. Now, that being said, guys, all great reversals are taken against the stair step. Okay, so one group of signals are taken with the step, there are others are taken against the step. Guys, now that being said, the best trend trades tend to be in the second buying leg or the second selling leg. Okay, as we've seen on our ABC patterns. The best reversal trades for the sellers tend to be after the buyers have failed at the end of leg 2 or at the end of leg 3. Now, what I want you to do, guys, tonight is simply focus on 3 steps and a stumble. If you walk away with anything from this webinar tonight, 3 steps and a stumble. That's it, full stop. But I'm going to show you on the live chart. Now, guys, the really, really important point, if all traders globally see the same thing at the same time and they seek to act on that information, we can effectively join the markets just as everybody else is about to, or we can join the markets before everybody else is about to, with the intent of generating some super high probability trades. Now, let me run through a static chart really quickly, okay? And then I'll go to the dynamic chart, and I think that's going to be hilarious. So this is from, guys, the night before we ran our last webinar, okay? And the reason I've gone back to this particular one is if you watch webinar number 2, guys, you'll see us actually navigating through this. In fact, webinar number 1, you'll see us navigating through this. Webinar number 2, we navigate through the same chart. Webinar number 3, same chart. And then I'll go to a live chart. So for those of you that haven't seen our charts before, guys, a very, very quick chart familiarization, if I can. We have a trend indicator running through the chart. Effectively, if it's red, we want to be selling the market. If it's green, we want to be buying. There is an extreme volume indicator built in. It basically tells us in the case of an orange candle, the sellers are using too much volume. We need to go back the other way. As we also have a pivot file. So we've got these brick walls in the market that the market tends to fail at. The pivots, guys, if you are a futures trader, the pivots are very, very accurate if you're using the right pivot file. Guys, over on the right-hand side, we've got price. And I think that's basically all we need to know at this point in time for a very, very, very basic chart introduction. Now, the chart we are looking at, guys, I did get that question last time. This chart we're looking at is a 5-minute chart. It simply means that every 5 minutes we get a brand new candle and we get to interpret what that means. Okay, that's literally, we get to interpret what that means. All right, now let me mark some stair step, guys, on for you here. We were talking about this last week. All right, so you can see here on the left-hand side, we've got a beautiful run up, and then we've got a little run down, and then we've got a little run up. Now, I said before, guys and girls, the best reversal trades in the market are not only traded against the step, okay, but they will occur at the end of leg 2, which is what you've got there, or at the end of leg 3. So for those of you that have studied what I do before, or those in the live trading room, you will note that we picked up this tiny little red candle at the end of the second step here. That tiny little red candle, you all know what it's called. It's not to get into technical names. It's a really, really amazing reversal signal. What has the market done? It's reversed down really, really nicely. Let me build on this a little bit further, guys. Let me build on this a bit further. Over there, guys, in the middle of the chart, we've got literally a step down, a step up. We've got a step down, got a step up. We've got a step down and a step up. So what have we actually got there? All I'm doing, John, in fact, John asked a great question before, guys, about Lockie. It's easy to see basically in hindsight, but can you see it live? So, John, all I've done is I've gone from the extreme low to the extreme high, then back to the extreme low, then to the extreme high, back to the extreme low, back to the extreme high. So what have we actually got there, guys? We've actually got 3 buying legs. So the buyers are exactly right, Jeff. So you've got the buyers have pushed up, sellers have tried. Buyers have pushed again, sellers tried again, buyers pushed again. But what can we anticipate? As per the PowerPoint slide I was showing you before, if we get 3 really, really defined buying legs and everyone else around the world is expecting 3 buying legs, then what can we expect the market to do? We can expect the market to turn and fall. Now, for those people that have been working with me for a while, what have we picked up there? We've picked up a dynamic pivot-based reversal, or some of you might be looking at that blue circle right in the middle of the chart going, hey, Lockie, there's a static bar reversal short right in the middle of that cluster of signals there, and all of those reversal signals have flown to the downside. So one thing about counting, guys, one thing about counting buying legs is if you've got 3 really defined buying legs, you can anticipate the market's going to reverse. So can you imagine if you pick up 3 buying legs and then you pick up a textbook reversal signal, what's probably going to occur? Green candle, the yellow circle. John, I would have put the line to the green candle in the yellow circle. Oh, 100%. So John's picked up a really good point. Guys, I literally offset that line slightly, so you ended up with a perfect sort of zigzag in the market. Okay, so John is correct. Guys, the little line needs to go to the top of that green candle in the circle, but I wanted to make sure, guys, you could see the literal stair step really, really simply. So John, absolutely 100% correct. So guys, this here, once again, like the rectangle over there on the left-hand side, you've got 2 rectangles. The left-hand one is at the end of the second leg, set up an amazing reversal signal. Then this one here, you've got 3 legs that set up an amazing reversal signal. And what did the market do? Fell away beautifully. All right, so let's have a game with this. I'm going to take some of this stair step away. Okay, what have I got here, guys? So I've taken some of the buying steps away, and now I've marked the stair step. So once again, extreme high to extreme low, back to extreme high, back to extreme low. Okay, now have a look what they do just here, guys. 1, 2, 3. So what have we actually got down the bottom here? Guys, not only have we got something really cool, but we've got a great lesson. Can everybody see in this case here, you've got a sell leg. So sellers, buyers have pushed in, sellers have gone down, buyers have pushed, sellers have tried and failed. And we've actually set it up an absolutely wonderful reversal signal straight into a pivot. So I wanted to highlight this for everybody because we as very, very disciplined traders, guys, we're not allowed to trade into a pivot. It doesn't matter how sexy a signal is. Guess what we can't do? Guys, we can't trade into a pivot. So what we say is, you know what? We've got 3 steps down there. We're expecting the market to reverse, but they can't reverse. So we end up with this incredible phenomenon, guys and girls, called 3 steps and a stumble. which is right there. Okay, that's where the market stumbles. Can't go down, so it basically just sits there. Eventually, the sellers get annoyed with this. Guys, and what do we end up with? Whoop, hang on. Let me build it for, this is where I'm going to go to the live charts, guys, and show you the live chart. If you can follow if you can follow my cursor, note what's occurred. We've sold the market down, bought it back, sold it down, bought it back, sold it down. So once again, you've got 3 selling legs. What do we pick up? A beautiful reversal, and it goes back the other way. So literally, you can have 3 steps in a stumble. If it doesn't reverse on you, in this case, we can't reverse through pivots. We're not allowed to. Everyone around the world knows the same thing. So they're like, you know what, Lachlan, you can't do that. And what do? 3 more steps to the downside. Now, what's our time like, guys? Our time is almost perfect. So let me bring you to a live NASDAQ chart. Now, I would love for there to be a massive aha moment here. So let me run you through it. Here is the European Open from today. Some of you are probably going to go, Lockie, this is just completely ridiculous. And I do hope you leave the webinar going, my gosh, this is awesome. So that little line, guys, I put on there is literally 4 o'clock in the afternoon Tokyo time. Ashwini, why only 3 legs? It's a really good question. Why does Fibonacci work? Because everybody thinks it does. Why do pivots work? Because everybody thinks it does. So it's basically, if I can, it's just a self-fulfilling prophecy. That's all it is. It's a self-fulfilling prophecy. You know, people say, well, Lockie, you know, well, for example, guys, look, hello. Hello. The market, and again, guys, it's a live chart. I'm not kidding. So today's date is the 9th of May. This is a NASDAQ chart. Right? So the time down the bottom is Tokyo time. So you guys, you can go and check a live chart if you want to. We have just picked up. Right? So this is a live chart. I love this expression. There is nowhere to hide. We've just picked up a -6 rated reversal signal off a pivot. Now, interesting point. Everyone in the world knows the pivot is there. Everyone knows it's there. So question is, how do you interact with the pivot in order to trade really, really well? Now, what happens if there were some legs leading into this? And let me mark it for you. And this, ironically, this is not even the example I'm meant to be showing you. But let me show you this. All right, so have a look. So I'm going to go from extreme low to extreme high. Okay, there's buyer leg 1. Okay, then I'm going to go to extreme low. Awesome. Then I'm going to go to extreme high. Awesome. Then I'm going to go to extreme low. Then I'm going to go to extreme high, but I'm going to offset it. All right, so we've got a bit of a zigzag. What are you guys seeing straight away? Can you, guys and girls, can you see buyer leg 1, then buyer leg 2? Okay, so let me use an arrow because I think this is quite hilarious. Have a look. There's buyer leg 1. Now, I did say in a perfect world that buyer leg 2 would be twice the size of buyer leg 1. Awesome. It's a live chart. Then they've sold back down and they've gone back up, and the buyers can't close above the pivot. They can't create higher highs. What have we got? 3 steps, 1, 2, 3. It just so happens that the 3rd step is the stumble. Exactly, Terry. The sellers are now completely in control of the market. But what is more important if I can, guys, if I can be so bold, that is a -2 rated static bar reversal short. The indicator told you to sell. Now, if you wanted to make $100 US on the NASDAQ tonight, guys, which is what I say to all the junior traders, $100 US, you would have gone short underneath that candle, and it's gone through your profit target in 5 minutes. Now, for those of you that know what I do, you could have also gone short under the next candle across here, which is a 2-rated reversal signal. So you guys see the difference here. So the little red number there that's a -6 rated static bar reversal short. This is also a reversal bar short. Either way, if you put your entry point underneath that candle when the buyers pushed up and failed, what did you do? You catch the sellers as they fell. Now, I personally think that is absolutely hilarious, particularly if it occurred at a Fibonacci extension. Now, what did I say the magic numbers were, guys? What did I say the magic numbers were? The magic numbers on the NASDAQ are the 133 and the 161.8. So let's just have a look, guys. I might get this number wrong. I tell you what, I'm not going to get wrong. That is an incredible pivot-based reversal on a live chart based on exactly what I prepared for you in those slides. So that's kind of good fun. Now, if you're a Fibonacci person, as you draw your Fibonacci up the ABC pattern, which is so critically important. There's my A, there is my B, and where did they fail? No way. Where did they fail? What did we say about the NASDAQ? What did we say about the magic number on the NASDAQ? What did we say? Can't be right, right? Can't possibly be right. Oh dear. Oh dear. Hang on a second. Something's going on here. Oh, no, I don't want to delete that. No. I don't want to delete that. Okay. So what I want to do, guys, imagine that magic 133 number. So what were these traders, guys? What were these traders turning off? What were the traders turning off? They were literally turning off not only with the 133 extension, but we've also seen them turning off. I've just deleted, guys. I've just deleted the Fibonacci they were turning off. That's not going to help me at all. I may have to go and put that back on, guys. But everybody could see, guys. Everybody could see right through there, right through. I mean, you could see the level before. I've actually gone and accidentally deleted it, but that's okay. Now, I wonder if this happened more than once. I wonder if it happens more than once. Let me just have a look. Oh, no, Adrian, just a guide. That's such a great question, guys. Adrian said to everybody, Lockie, with NinjaTrader 8, should I be using the zigzag indicator? It's okay, but it's not accurate marking stair steps. So please don't use the zigzag indicator for stair stepping because it's actually not accurate. Mate, awesome question. Now, guys, let's see whether this has happened again. All right, I'm just checking my time. All right, I've got 7 minutes, and I'm actually going to finish on time, which I'm really excited about. Let's see how we go. All right, let's have a look. So the market sold down. So my trading team this afternoon, guys, some traders picked up this reversal here, which was absolutely brilliant. The junior traders picked up this reversal here. Why did they pick up that reversal there? Because the candle had a strength rating of 6. It basically said, do anything you possibly can to go short. So most of my junior traders sold underneath that candle, guys. It ran down through their profit targets and they're very, very happy. Now, mind you, for our webinar tonight, guys, let's have a look. So here is, now again, guys, I can't highlight enough, live chart. All right, so I haven't gone back and gone, oh my gosh, here's one from 20 weeks ago that looks sexy. Let's have a look at this. So we go from extreme high to extreme low. Awesome. Go back to extreme high. Awesome. Go back to extreme low. Awesome. How many selling legs have we had so far? One really big one and a slightly little one. The buyers show, the sellers cruise down. What have we actually got? Guys, can everybody see you've got 3 beautiful selling legs, and then this orange candle down the bottom here says the sellers have used all their volume. That's a climactic, guys, or what we call an extreme volume candle, and it set up a -3 rated reversal going back the other way. Interesting. So again, guys, if you were looking at this, if you traded the NASDAQ this afternoon, you're saying, oh, Lockie, I really would have loved to go long there. Well, now you know that they were already 3 selling legs into the move. So what is the market likely to do? It's likely to turn around and go back the other way. And John, you're on the money, mate. It's on the hour. So John, you're coming to some really good webinars. These guys love to turn on the hour. So guess what? You've got a 3-phase move, which we all know about. You've got the sellers using way too much volume, which means the market is likely to reverse. Guys, what did it do? It set up a -3 rated static bar reversal long and then went 10, 20, 30, 40, almost 50 ticks in your favor, almost 50 ticks, which is $250. So again, if your goal was just to make $100 as a junior trader and stop, guys, that's your $100 box. You basically ended above the little orange candle and it went through your profit target in one move. Now, interesting thing about that, guys and girls, interesting thing. Into the 240, exactly right, Jeff. You're absolutely on the money. Now, the beauty of this, guys and girls, the beauty of this is really quite brilliant. And I've got time for one more example. All right, let's have a look. So again, let's have a look at this little point here. Okay, remember that point that I raised in the slides and said, there is the B point of the ABC pattern. So the moment the buyers stick through that, they own the stair step. Let's have a look. Let's have a look at what then happened. So the sellers sell the market down. Okay. The buyers push the market back. The sellers push the market down. Buyers push the market back. Sellers push the market down. How many selling legs have you got there, guys and girls? How many selling legs? Would everybody say you've got, Lockie, you've got selling leg number 1, selling leg number 2, and then finally selling leg number 3? Awesome. So what are you expecting them to do? You're expecting them to reverse. Now, who else around the world was thinking the same thing? There's your extreme volume candle, which says, guys, as per the indicators, we need to reverse. Now, question. Let's test if you've learned anything. What is the NASDAQ's favorite number? Starts with 1 and ends with 33. So I wonder if you got really good at trading the NASDAQ, guys, whether you could reverse off the 133 extension. I don't know. That could be a good question, right? So let's have a look. The most recent stair step leading in, we're going to go down from the extreme high to the extreme low, back to the extreme high. And in this case here, guys, they've cruised down, they've gone through the 133 extension all the way down to the 233 extension. In saying that, guys, that means for me, I'm using the wrong Fibonacci. Okay, so let me show you. I did that on purpose to show you this. So I used the most recent stair step, that one to that one. Basically, they've gone too far. So what do you think I could do, guys? I'll tell you what I can do. I can go back to the bigger stair step. So there's my step down. There's my step up. Now, I wonder, because we know the NASDAQ loves the 133, I wonder if we could find the 133 using that stair step. All right, so there's my top. There's my bottom. There's my top. And where did they fail? Guess what that is? Guys, that is a 133 Fibonacci extension reversal based on the fact you've had literally three perfect legs to the downside. Or Lee, you're on the money. You can use the 15-minute chart as well. But what I wanted to show you guys and girls tonight, I mean, the fact that we got a live one is actually kind of funny. But what we've got here, I'll draw it back on again. Extreme high, extreme low, extreme high, extreme low. You could look at that and say, Lockie, they're using way too much volume. They can't sell the market down. I'll tell you what I'm going to do. I mean, this is a -2 reversal long. I'm going to wait for them to push down, fail at the 133, and then I'm going to go long and go back the other way. Now, if your goal, guys, if your goal is to make $100 every time you take a trade, you need the market to go that far in your favor. And that's how far that next candle went. So guys and girls, may I suggest that this rule of 3, you can see on the left-hand side, rule of 3 on the way down, set up an incredible reversal signal straight through its targets. Rule of 3 again, off a Fibonacci extension, extreme volume, reverse, boom, goes back the other way. So we've had 2 short, so we've had 2 long trades and then a short trade based on exactly the same theory. How long has this been going on for? Guys, I discovered this in 2007, around about August, September 2007. And since then, what I've sought to do is master the art of stair-stepping the market. Literally master the art of stair-stepping it. So guys and girls, what I'd love to know, literally we're bang on an hour. What I'd love to know is what is the number one lesson that you've learned out of the webinar tonight? Is it let the market do the heavy lifting? Is it 3 steps and a stumble? Is it the NASDAQ loves the 133 fib extension? Is it stair stepping? Is it reversing? Is it all of the above? I'd love to know what it is, because guys, you probably get all of the above. Brilliant. Mark, the 133 fib. Guys, I love doing what I do. Most importantly, I love doing it live in the live trading room, guys, because then everybody gets to watch it live. And the beauty of this, there's absolutely nowhere to hide. Guys, so can everybody notice how simple these charts are? Yeah, there's no MACDs, there's no stochastics, there's no triple clusters, guys, it's just straight, pure price movement trading, and it works. Guys, it works and it works and it works if you choose to use very, very simple indicators and very, very simple strategy. So guys, I'm going to break a record. I'm actually going to finish on time tonight. I know that TTP, guys, the trading pit. So again, thank you for the trading pit. You guys are doing an amazing job. Guys, TTP will have this webinar on YouTube. Guys, part 2 and part 1 is already on YouTube. Part 2 is about to go onto YouTube. This is part 3. Guys, once the office is back overseas, this will go online. Please watch it, guys, share it, learn from it. And again, in tomorrow night, guys, in the live trading room, I'll be doing exactly this over and over and over again. And guys, look at the potential profit just on the NASDAQ live chart from tonight. I think it's brilliant. So the trading pit, thank you for having me, guys and girls. Thank you for coming and saying hello again. And I'll see you in either the live trading room tomorrow night, guys, or we've got our next part 4 webinar is Thursday, same time next week. Guys, we're going to get a little bit more technical, little bit more advanced, but some of the intermediate traders will absolutely love it. So guys, I'll see you in next week's webinar, or I'll see you in the live trading room tomorrow night. Have a great night, everyone. Thanks for having me, TTP. Thank you, guys and girls. I'll see you soon. Bye.